Hello everybody, welcome to my Chart Annotations Review Series. This is episode 19 and 20. If you haven't already, check out the first episode of the series. I sort of do a little bit of explaining of what I do, and just watch your way through the episodes and you'll kind of get an understanding of how I like to look at price. This is especially intraday without really a bias. I have been starting to implement bias in though. So this right here is 5:40 a.m. I'm going to go to the 4-hour chart. Now there is a bunch of annotations so you can kind of predict where price is going to go, but I'll turn off these. And you can see in the past day, right, all of Tuesday, we just had a massive run up and we took out all-time highs, which was right here. And so now from here, I either expect us to run up. We can maybe dip down. Did we tap this for value gap yet? I don't think we did. No, we haven't. So we have this for value gap and we have this one, right? I also kind of want to sort of go over real quick. I'm going to do a quick lesson of how I would go over a precise spot where we could bounce off of a 4-hour for value gap like this. So you have your 4-hour for value gap. Let's say we went down to a 1 hour. We have two of them right here. Now, if you were to take discount of this range, right, ideally I want price to reach down to discount of this range. So this isn't probably what happened, but this is in theory what I would like to see. So we look at discount, you can see we have this 1 hour for value gap right here. Extend that, you can draw that out. Let's say we went to a 15-minute. You can see we got a couple 15 minutes here, right? And then here's a bigger one. So let's say you saw this bigger one, and you could just keep narrowing this down. So this could be 15-minute, and then you could go down to 5-minute, look at it, 1 minute, etc., right? So I'm gonna delete these. And then let's go back to the 1 minute here. So again, I have fair value gap by nephew Sam that shows me sort of the higher time frame fair value gaps that are bullish and bearish. Bearish is indicated by red and bullish is indicated by green. I also have this right here that shows me the previous sessions. So you can see that London and Asia have not been taken out yet. So we could possibly see either side here. Let's say this got taken out first. I want to then see these highs get taken out. I'm also going to, why not? I'm going to draw, I like to draw Asia, right? And then up here we got London. And then down here we got London. Where's this at? There it is. And then we have Asia all the way down here. So these are definitely high draws of liquidity. All right, so I can just extend these out. Okay, so looking at price here, we are in a downtrend going into a macro. I could expect to see some sort of reversal from this macro. To take an entry, I do want to see an SMT created with a reaction off. So downtrend, we have an SMT. From this SMT, we have a reaction off. I want to see this high get taken. So the high gets taken, you can definitely see the reaction. And so this is also a market structure shift. So if we were to tap into this fair value gap, I would take it. So right here, we're in the fair value gap. And you can also see, in addition to tapping in this 1 minute fair value gap, we also close like, we wick it like just like this. So you could put first entry here. I would take this, put your stop at the candle's low. This would be a 4.25 stop loss. And then you could take profits maybe at this high. You could take you could ride it all the way up. You could wait until the macro is over. So what I like to do is, if we are having a trend like this and I'm holding runners, right, I may also take profit at this high as well. Although probably not, because my risk to reward would not be that great, but maybe I'd take a little bit off here. I would want to probably take it off once the macro finishes. So right here, the macro finishes, it actually makes equal highs here, but now it could possibly start to dump. So you can see right here, the macro beautifully did the reverse of this previous trend with a nice model. That is beautiful. So now I am going to watch more, wait for more structure. You can see we have an SMT, displacement down. We have a couple liquidity gaps here. We take this SMT TP. We retrace up to here. We could either retrace to then go lower, or we could take out this protected high. So right here, we take out the protected high. Right, waiting for more structure. I do remember this day, and so this is Thursday right here, and then Friday. I remember action was not that great. So right here, you can see downtrend, we hit macro. What do we start doing? We start reversing what that was. We also do have this 1 minute right here. So since this 1 minute has been previously respected multiple times, we could see it get respected again. So this is a very high area of resistance, so we could bounce off of. So you can see right here, we kind of did, but then we tapped into this little liquidity void, or this liquidity gap, and we skyrocketed. You can also see that this is an entry because we had downtrend. Here's your recent high. Closing above this high would be market structure shift, and then into this gap right here, which this is where I would look to take an entry. This could be an entry. I probably would not take this just because of this fair value gap, but you could put your stop at the bottom of this low, or bottom of this candle, and then you could see we skyrocket. We take out London high, and we'll see we'll take out Asia high. We take out Asia high as well. Okay, so now these have been taken out. We additionally respected this fair value gap. That's probably just to take out Asia high. And now we've done that, sort of consolidating here. Now we're going into this macro. We're having an uptrend. We could see a downtrend just like this. And then let's see if 830 candle, this next candle could be huge. So that, yep, there we go. Massive wick up. This is why I would not really want to take any positions in here, because let's say I decided, you know, let's say you looked at this and you're like, oh, this is a market structure shift, right? This is a market structure shift, and then this is a fair value gap right here. I would not want to take this because we would just, you know, go way, way above it because this candle will be massive. Could also go the other way to where we could respect it and then just dump down, but in this case, we just wicked up. So right here, we take out Asia, or we take out London low. We'll probably take out Asia low too. There we go. So you can see the clear draw of liquidities. We drew up to this London and Asia high, and then we came down and we went down to this London and Asia low. So now waiting for some more price action. We kind of come up here. We're respecting this 1 minute. We create an SMT. And what happens after we create an SMT? We take out the protected high. So why did this happen? This is something, right, that I sort of learned to recognize. And even though we created an SMT, we had displacement down. The reason we did not respect this protected high, and we actually took it out, is a few things. Number one, we did have this fair value gap that is very, very strong that we have been respecting. Number two, we tapped into discount. We have been in discount of this range right here that we've also been reacting off of. And also, this move right here did not create any fair value gaps, right? It was not enough displacement down to create any fair value gaps. So it was not that strong. Thus, we just came up and took it out. And also we have a macro which could push price in either direction. So have a little bit of a run here, right? Uptrend. And then we end up selling off at the end of the macro here. Back into this 1 minute. Sort of consolidating. When we consolidate like this, after we've hit this 1 minute so many times, it's sort of showing weakness to the upside. So after we close and we just get displacement down like this, this could honestly be an entry, because this is showing us that this fair value gap that has been bullish is now getting disrespected, right? Disrespected right here. We come up. You can see we also use this as an inverse. So we tap into it. We could see lower, although we do have a macro though, so we could get pushed up from this. But we do sell off a little bit here. You could take an entry here. You could put your stop at this high. This would probably be a bit of a big stop. Market has been open. So let's see how big this stop is. Yeah, this would be too big of a stop for me. So I probably would just avoid taking this trade, or take it in the, I don't know, because we did respect off this 1 minute. This would be a little bit more difficult of a trade. So I would not take this one, but you can still see it does work out. We sell off, we take out this low right here. Okay, and then we make a low here, bounce off. If you're looking at this as a downtrend, you could see this trying to reverse the trend a little bit. We tap into a 1 minute here, go a little bit higher. We come back down to this 1 minute, respect it again. We form an SMT. Now I want to see displacement up. So there's displacement up. We take out this SMT TP and we create a fair value gap. So chances are, since we've created this fair value gap, if we tap into it, it could possibly respect. So now we're into it. You could take an entry right here. This would be a pretty big stop though. So you could take it at possible midpoint of this fair value gap, just like this. This could be first entry, right? If we draw this out, we could see consequent encroachment. So let's see if we respect this. Here'd be your stop. So we do respect this. We take out this high. And then we form another SMT right here. So after we form this SMT, I would take it off. Honestly, we actually formed it right here, but this is probably where the move is stopped. We do have a fair value gap, so let's see if we respect it. We sort of are respecting it. We create another little SMT right here, and then we dump down. Now you can see with this macro, we're in an uptrend. We have double SMT up here. I do expect this to sell off. So we get a great sell off. Here would be market structure shift. And then right here could be first entry. You can put your stop at the top of this candle. And of course, we'll see if we respect it. We don't. So we do still respect. We're probably still going to respect this, but you do still get stopped out here. But then we create an SMT with displacement up. So it is possible we could come up to see this high, especially because they are protected highs. But just remember, one, we have this 1 minute fair value gap that is getting respected a lot. And this also does not invalidate the model for us reversing. And we don't have a fair value gap created down here. So there's nothing for price to really bounce off in this spot right here. The only thing it could bounce off is possibly this 1 minute fair value gap, right? This inverse. We could see it, but we are, as you can see, wicking on this 1 minute and this 1 minute. So price really doesn't know which way to go. It's probably going to pick a random direction. So in this case, it's still consolidating. It's still trying to decide. And then it just ends up dumping down here. So now we're tapped into this previous 1 minute. Just keep watching price. So we do finally take out the SMT TP from this SMT formed. So in this example, right, this was your initial entry. We sold off. We came back up, disrespected this 1 minute, but we did respect this 1 minute right here. So you could sort of see this as the model still playing out from this previous SMT to then come down and take out this SMT TP. All right, so we are respecting off this 1 minute. We form an SMT here, displacement up. We're in a downtrend going into this macro. We have market structure shift from this high. We close above this high. This could be first entry right here. This would be a massive stop, so probably I would take entry at discount or at crunch current encroachment of this 1 minute. So I'd probably wait for us to tap down into here. So there we go, we tap down into here. This would be your stop loss. You would get stopped here. So this would just be unfortunate. Right, this is an example of price not being that efficient. But again, we have already taken this SMT TP, so that is a sign that we could possibly go lower. But now we tap into discount, which we actually already tapped into discount right here, but we're tapped into discount again, respecting this previous 1 minute. This 1 minute has been respected a lot, showing it's very strong. And then we sell off. We take out both these protected lows. Okay, let's watch price a little bit more. All right, so right here, we form an SMT. We have displacement down. We're also having a uptrend going into this macro. Here would be fair value gap. And then since we have displacement down from this SMT, I would consider this as a first entry. We don't have market structure shift yet, but this could be first entry. Let's see if we displace from it. We don't end up displacing from it. And we just keep running higher. And then we're all the way up here. So this entry did not get respected. Okay, so now we're at the end of this macro, displacement down. We're in this 1 minute. We'll see if it does respect it. We come up and then, and we sweep this high, tapping into this 1 minute again. So that makes this 1 minute stronger, and this little PD array right here makes the move to go down a little stronger. After that, we have displacement down. This could possibly be an entry. The reason why is because we were just in an uptrend. Possible draw liquidity could be, which I have right here. It could be discount of, if you're looking at this, it could be discount of this leg. What is this low from? This low is actually probably going to get put in soon. But let's see what happens here. Here could be an entry. Right, this 1 minute has got respected twice, displacement down. This would be a possible entry. This TP gets taken, and then down here, these equal lows get taken. All right, watching price a little bit more. We tap into a premium of this range, and then we formed an SMT. But once again, right here, you can see this was a protected high. But why did the protected high get taken? Because after this SMT was formed, there's no fair value gaps that was created. So there's nothing for price to reject off of. And we also had a 1 minute here that we respected off of. So even though we tapped premium of the range, had these nice PD arrays, we had no big reaction off of this SMT. Okay, so watching price more, we have an SMT here. This will be a protected high after we get displacement down. Here's your massive displacement down. Here is your SMT TP taken. No. Okay. Now we're in a downtrend, or actually we're more of an uptrend going into this macro. This downtrend is just a couple candles before the macro. We could possibly tap into this. This doesn't quite tap it. But we have this right here. So personally, me, I would want to see it tap into this fair value gap because we have equal highs here. This is sort of a draw of liquidity. So there we go. We tap these equal highs. Only thing that's a little sketchy is that if you look at this range right here, we tap into discount. this could be the reversal from the macro, and it's possible that this could be the next draw of liquidity. So honestly, I would not take any sort of trade here. But this could also be an entry for shorts. So if you did take an entry for shorts, let's say you took your entry right here, right? And then you put your stop at this high, which we would never get taken. You could put a TP down here, and this trade would play out with this model. Okay, so now we're coming up towards this protected high. We don't take it, we form an SMT, displacement down. We have a 1 minute created right here, but this is kind of the end of the day. So we're most likely just going to consolidate, right? Nothing's going to happen much. All right, so now let's go to the next day. So I'm just going to kind of do this. All right, so going into Friday here, I'm pretty sure the action was really, really bad this day. So we create, all right, we create an SMT right here. We're having an uptrend going into this macro. This is really nice to see. I do expect this low to get taken in any candle. So there we go, that low gets taken. We also have this 1 minute. And what's really nice about this 1 minute is that it's formed before the SMT TP gets taken. This is something that's not really that common to see. So if you see this, especially aligned with a macro, pretty much every single time, I will take this entry. I will take this entry pretty much every time. It goes straight down the SMT TP, and another possible TP could be this fair value gap, because one, it's a draw of liquidity, two, it's a spot where we could bounce off of. In this case, we end up actually not going down to it. We do right here, but you would probably get stopped out with some profit if you had your stop up here. So we come down and take this TP. I'm going to draw this out real quick. Okay, and then right here, we form an SMT with massive displacement up. There's no fair value gap created, but we do take out this high, and we do form an order block right here. So I do want to possibly see this protected high to get taken, which would also be the SMT TP of this SMT down here. Okay, internally right here, we have another SMT formed. We take out this SMT TP, this is protected high. We have a fair value gap right here. We tap into it, and we had a little lower. So this could right here be a possible first entry because we create a fair value gap after this SMT. You could enter into this. This would also be pretty nice because we do tap into this 5 minute. We do tap into this respected 1 minute. And we also have this 1 minute right here. So this is an entry I possibly would take. And then we sell off, and we end up taking this protected low. And you can see right here, another great example. Why does this protected low get taken before this protected or before this SMT TP or previous really protected high? The reason why, you can see there's no fair value gap created in this move at all. No fair value gap. We do displace above a high. Actually, there is a small fair value gap right here, I think. Yeah, but with this fair value gap, we created this right here, and this model sort of suggests that we're going to break through this 1 minute, so this would cancel out this model right here. We do take this protected low, forming more structure. We tap into this 1 minute, sell off, take this low. Right now, I'm just going to let more structure generate. Nothing really happens much here. Nothing really happens much on this day, but we have another SMT here. Here's the SMT TP. We take that out, come up, take this high, right? This is a consolidation macro. But this macro, I don't like to take this macro right here just because of this massive candle. That always forms at 8:30. So here's the massive candle. And this candle right here makes everything else look just super tiny. right? If you're just looking at structure like this, I guess it's still consolidation. But we have this massive candle breaking all these PD arrays. Could see a bit lower here, or we could just reverse. We do tap this 1 minute for value gap. This could be a possible entry if you want to be risky to possibly scale at this low. So we do take out this low. Do we have anything down here really? We have discount right here. So this is something that could possibly get hit. We do sort of slow down here. These little candles suggest we're slowing down. And then we buy back up here a little bit, retrace. Right, here's a discount retrace, tap into this 1 minute. If we respect this, I'll take an entry into another 1 minute. So this gets respected. We come up, we form a fair value gap off of this fair value gap. This could be first entry right here, or you could take first entry at discount. So I'm also going to label that as well. Maybe I'll enter this as second entry. So if I put, I'll put some contracts in here and I'll add some here, and maybe put my stop at this low. This would be a little risky though, because it would be a 19-point stop. Yeah, I would not take that. This would just be a little difficult of a trade, but let's see what happens here. We buy ourselves back up. This could be TP because it could be premium. This would be 50% of this range. We could possibly bounce off of it. You could see we tap discount. We do bounce off. For value gap created here. We tap into this for value gap. And then we come up here. And we also have an SMT formation right here. So we have this 1 minute as well. This would be a little more difficult. We have sort of a downtrend going into this macro, but it also isn't that clear. This could possibly be an entry because of this SMT, followed by a displacement leg up with a fair value gap. Macro could push us in this next direction. So it does here, right? We actually hit the, let's see if this is midpoint of this. So yeah, we do tap the consequent encroachment of this fair value gap right here. Just like that. And now we get displacement off. We have this 1 minute. We're kind of consolidating in it. We come up to this 1 minute. Right, we reject off again. And we form an SMT down here. This is the next thing that should get taken, this SMT TP. We also have this 1 minute again that we're respecting. This is a 5 minute. All right, we come up, take this SMT TP. We run a little bit higher. All right, so now we form a massive SMT up here, followed by displacement down. We also have an uptrend going into this macro. This macro should sell us off. Possibly, we do have these. We have all these PD rays, these bullish for value gaps, but we could possibly go down to this low, and that low, that's protected low, also aligns pretty well with discount of this entire leg right here. So we could see us happen to discount to then go higher. So right here we sell off, take out this protected low. We're in discount, could possibly see a reversal here. Displacement up. More displacement up. Okay, so right here we sweep this low and form an SMT. So now I want to see this SMT TP get taken. We don't quite take it yet, but we do form another SMT right here. And then we have a 1 minute for value gap battling against us because, well, we'll see if this gets hit or not. We'll see if this gets respected. It does not quite get respected. I don't know why I drew this out, but you can see after this SMT was formed, this SMT is formed on the trend up to this SMT TP. So both these get hit, double draw of liquidity. That's very nice to see. We also are into this 1 minute. And then we come down, we trap into discount of this leg, respecting this 1 minute. I want to see us displace off, and then here could be a possible entry to then go higher, possibly take out this high. Now keep in mind here, this SMT, we did not sell off to this low. And since we're kind of going back up right here, we're forming bullish models, it does suggest that this high will get taken. So let's just watch more structure here. All right, we're into a discount now. We come down, we sweep this low, displacement back up. This is very bullish. And then we almost take this TP. We almost take this high. This is a protected high. We're so close to it. We're so bullish from the structure. I do expect this high to get taken out, which does also show that we are extra bullish. All right, so right here we create a fair value, or we create an SMT. Here's SMT TP, and then once again here we create a fair value gap before taking this SMT TP. So this would be a very high quality entry. We're also in a downtrend going into this macro, so this would be a really nice entry. So right here we actually have this entry taken at the same candle, this SMT TP. I don't know what gets hit first, but hopefully this, and then it comes up to here. We do run up, and then we do finally take out both these TPs. We sell off a bit. We have this protected low that wants to get taken soon, so we'll see if we get that taken. We tap into premium of this range, and then since we are so close to this protected low, actually hold on. Why do I have an entry right here? Oh yeah, because we respect off this fair value gap, which is also in premium. Sell off, this entry should actually be right here, not at the top of the fair value gap. That's why I was confused. Here's your sell side, or here's your stop loss. I still want to see this protected low get taken. Right here does not get taken yet. Then we form an SMT. So right here, this would just be really unfortunate. But this also does create another protected low right here. And so this is two protected lows right next to each other. So this should surely get taken very soon. We take out this SMT TP. And I think I remember something right here. So, yeah, I don't remember. But we take out these double protected lows. We take out this sell side. Okay, so now this is something else. Oh yeah, this is what I was wanting to say. So just like I said last episode, episode 17 and 18, whenever it turns 2 p.m., we usually will have a trend in a specific direction that is relative to the previous model. So right here, here's this model to where we take out these highs, okay? So buy side's taken, we want to sell off now. We get displacement down, create a fair value gap right here. We retrace up, tap into tap into premium. So right here, if I did see this, I would honestly probably re-enter into this 1 minute because it's almost 2 o'clock. This 1 minute previously got respected, so you could possibly enter into this again. Now the stop is up to you. You could put your stop here and have a 2-point risk, or you could put your stop like somewhere like up here and have an 8.25 point risk. So this is probably where I would take it, right here. I would take it right into this fair value gap. And this right here, this fair value gap is so strong because once it turns 2 o'clock, we should sell off. So around 2 o'clock right here, we sell off, and it's most likely going to be a massive sell off. Just like so. 2 o'clock, massive sell off, right? So now we stop here with this displacement up. If we respect this, which we are respecting it, I do expect this move to be done. So now we're just consolidating here for a while. We form an SMT here, displacement down. All right, so now we have a fair value gap created. We still have not taken SMT TP yet. I would 100% enter into this 1 minute. So right there, there's your entry. Your stop can be right here. and then we sell off, take this SMT TP. Okay, so now we're entering a macro with a downtrend. I want to see a possible reversal, possible market structure shift. Right here, we get market structure shift. This for value gap would be your entry. This would be a really nice entry, so you can enter in there. We are hitting this 1 minute for value gap that has previously been respected though. But we did form an SMT, so this SMT TP should get taken inside of our entry. That gets taken. Then we form an SMT right here. This SMT TP gets taken. And then if you're in this entry, you can possibly take a TP right here. Especially if we form this SMT right here and we do sell off, I would just take yourself out of the position. And we could possibly flip to the downside to take out this protected low. Especially since the macro is over, we create a fair value gap right here. I do expect us to go lower to take out this SMT TP from this SMT and this protected low from this previous SMT. So like I said, if we do ever create an SMT, we have an SMT TP, and we have a fair value gap that's created before the protected, or before the SMT gets taken, the SMT TP gets taken, I would 100% of the time most likely take this entry. So here would be your entry, your stop loss would be up here, and then protected low taken down here. And then over here, we're almost done with this, but over here, we have an order block. This gets respected, these get respected, but it is end of the day here, so there's nothing else. So that's really all I have to talk about these 2 days. I tried to make this as quick as possible. And once again, even though there are models that did not seem to work out, there is a reason for each and every single one of them. It's most likely with other models battling against others. But if you can pay close attention and understand each and every model, you can sort of understand better why some models work and some others don't. So again, feel free to check out my Discord in the link down below. There is a free trial and free access to a course with everything that I talk about. And yeah, I'll see you all in the next episode.